Hi, I'm James Paholic from CMG Wealth Management with another market update. Well, today is Thursday, April 3rd, and the first quarter of 2025 is in the books. In today's video, we want to give you some insight to the Trump tariffs that were just enacted, the market reaction to that, and what we believe might be potential outcomes, and also the moves that CMG Wealth Management is looking at making. So a little market update as far as performance. As of today's video, the market closed. The NASDAQ is down almost 13% with today's massive sell-off. You've got an S&P 500 that's approaching correction territory again, and the Dow Jones Industrial Average is down just shy of 5%. Conversely, the bond portfolio, well, they're doing what they're supposed to do. They are going the opposite direction. Bonds are up for the year, so about 2.5% on our bond portfolio, and of course our large money market position too is up about 1%. So what to make of all these tariffs? First, let me explain just a little bit for those to bring everyone up to date that might not know just what a tariff is and how it's affected, and then how it's collected and what potential outcomes might come of it. So as these tariffs are enacted, they are reciprocal tariffs, meaning that if you look at, let's just say, a country like India that charges us 56% for the goods that we bring over to them, we have increased our tariff to 26%. It's not even at parity with them. With China, we've raised it up another 34%. They're at 67%. As these monies come in, or as these goods and services come into the port of entry, that's where those tariffs are collected on both sides, and they go into the government's general fund. So it remains to be seen just how large and how much money will come in to the U.S. coffers because of this. I'm sure the administration will give us those updates, but the number is probably going to be very large. However, we do believe that this is a negotiation tool, and it is not going to be permanent. When you look at that, it's important to understand that usually just some rhetoric and threatening someone to do something typically doesn't do it. The old saying is you got to put them on the clock. If you want to change the future, you have to disrupt the present, and Trump is a disruptor. In fact, of every president that we've ever had, he's probably the most. He's a businessman. He's looking at the way the U.S. is run as a business. And in some cases, regardless of your political affiliation, when you look at the debt that we have, almost $38 trillion, it's unsustainable. Something has to be done. And the fact that we're moving towards some government efficiency, I think for the long run is a good thing. We do have a credit rating, and it's important that we address these measures before some type of calamity comes. We do believe, again, however, these are negotiation tools. We're just one headline away from the market going right back up again. You couple that with tax cuts, deregulation, and a pro-business environment. When you look around at all the CEOs and what they're saying, things look pretty attractive. It's important to note, though, that the S&P 500 has broke the 200-day moving average by 5%. For us, that's a risk-off trade. Doesn't mean we sell all of our stocks, but we start to look at that. It is a discipline. Where can we reduce risk? The bonds, again, are going to be a counterbalance to the sell-off in the stock market, as will the money market. So we feel like we're in a very good position. And that's something to really drive home to our clients. When you see these massive market sell-offs, NASDAQ down 6% in one day, S&P 500 down 5% in one day, it's easy to think, well, my portfolio is going down at the same pace, and that's just not the case. In fact, if you look at a lot of portfolios with the bond positions that we have and the stock positions what we have, not all stocks are down. It's worth noting, it might be hard to believe, that Berkshire Hathaway year to date, even with today's sell-off, is still up over 17% year to date in 2025. The Magnificent Seven, however, are magnificently down those valuations got pretty high. And that's common with growth stocks. They go way up, and sometimes you think, how could they go any higher? Then when the momentum trade is over, they reverse pretty quickly. They always say sometimes it's a staircase up and an elevator down, and it seems like that is par for the course now. So we are evaluating all these things and looking for opportunities, assessing these market events as they unfold. And one thing's for certain, our discipline, we will act for our clients. We will keep bringing you market updates and keep bringing you pertinent information as it unfolds. As of right now, we do again believe that in the days to come, we'll get a little bit more clarity. If this ends up being an all-out trade war where these countries come back and they increase their tariffs to match our tariffs, we don't foresee that happening, but if it could happen, that would bring a lot more market uncertainty, and a risk-off trade would look that much better. So one thing's for certain is that there's going to be uncertainty. Remember, we had 2 very good years in the stock market, and even with the sell-off that we're having right now, from a historical perspective, we're just right in the normalcy of things. So until we come up with another market update, which should be here shortly, we wish you all the best. Any questions you may have, please don't hesitate to reach out to us. And if you feel like this market update would help investors that you know, please feel free to share that with them. Take care now. Thank you.